When I say this way is a water starting with for me to taste the thrill of every day. All right, I was trying to nail that on the best part. What's going on, squad? How are my stock market technicians doing? How are my stock market ballers? How are my bulls? How are my bays? How's everybody out there? I hope it's good because I'm doing good. It's a Friday, post-market, made some cash today. Holler at your shorty, holler at your ERX, holler at your Devin, holler at your Fang. But that's not the point for today. The point for today is to teach you a very easy and simple lesson. Many of my bulls already know this. My channel seems to have quite a big following of sophisticated investors, but I want to bring the good word to everybody. So the Sherpa is going to help you climb and help you get to the top of the mountain. How do we do this? What do? We always start off, figure this out first. We always start off by going to everbullish.com. Remember, if you appreciate this info, you can always buy me a cup of coffee or buy one of my $100 portfolios that beating the living shit out of the market. They're making your portfolio manager scared. Newsletter investing is the future of the economy, and investing is a gig economy. All right, so let's do it. Let's share a screen. Let's get my ugly haircutted mug out of the way, and let's start rocking and rolling with the Sherpa's lesson of the week, the Sherpa's #1 lesson. This is going to be a technical analysis lesson here, and we're going to pull up everbullish.com. All right, perfect. I've sunk into the background, hopefully on the screen here. You've got everbullish.com, your resource as a trader, as an investment manager, and as a stock market maven. Click on the right side here, investing articles. The Sherpa's lesson is now up. I'm going to create a private section of the website for all of my customers and anybody who donates here in the future on the Sherpa's lessons. For now, they're free, so you're welcome. What's the deal? The main thing here is that my first 12 years out of my 14 years of investing experience has a lot of meetings and a lot of appointments with a lot of wholesalers and a lot of customers and a lot of fodder and a lot of news and a lot of CNBC and MSNBC and Bloomberg and a lot of different outlets. And one of the first things that you hear people drop that are in the know is the death cross, right? You hear more about the death cross than you do the golden cross. I just want to explain to you what they are, give you a little bit of insight so you can sound cool when you talk to your friends at the least, and be a stock market trading maven like me at the most. So what's a death cross? It sounds pretty scary, don't it? Well, it is pretty scary. What it is that this is, we're going to start with the golden cross actually and what the difference is. So first of all, let's just talk. The Sherpa's lesson, technical analysis, death cross versus golden cross. You guys already know this, but when you see the word TA, when you hear the word technical analysis, it's a CFA question, by the way. Technical analysis is simply the use of charts. They always just say technical chart. Think of a technical pencil. Think of a guy drafting on a board, right? That he's usually drawing a chart or using some type of analysis using timing or trading decisions using a chart. Technical analysis uses all sorts of data, time, and price to predict the volume, indices, and markets of stocks. So this is what this is my definition. The rest of this mostly I plagiarized off of different places on the internet because I didn't feel like doing my own stuff, and I want to just teach you what it is. There's easy ways to find information, use it. That's a big part of being a trader. So the main point here is that at times you'll hear things like double head and shoulders. You'll hear things like double bottom or double top. You'll hear things like cup and handle. These are just patterns that you recognize. There's entire Japanese candlestick books written about over 4,000 different patterns. I don't pay any attention to that. I just look at the chart and then I flip the chart upside down. And if I look at it right side up and I say it looks like that's going to go up, I like it. If it looks like it's going to go down, is this a stock that I'd short? I buy it. A lot of times I've talked to you guys about other things as well, but I want to stay on topic here. So we got the candlestick. Hopefully everybody can see this. This is the chart. Pretend that, obviously the reds are the down days where it finished below the opening price. Days that are green is where the closing price is higher than the open. And then we have these. So this is a year chart. A lot of people use the periods that I'm going to explain to you here in a second on year charts, but very simple. There's moving averages. And what you want to think about a moving average is, the way I've always explained this to people, is a moving average is the average daily price over a certain period of time. And that time is called periods. Okay, so let's say it's a year, there'd be 240 whatever days of trading inside of that period, right? So that's your period is 1 year. And then 200 would be the last 200 days, and the moving average would be the average of the 200 days before and after the date, and then so on and so forth. So what it's doing is it's carving out the signal and the noise. It's taking the noise out of all that data and compressing it to an average, okay? So a long moving average has a lot of data in it, and a shorter moving average has a shorter amount of data in it, okay? So what happens if I have a 20, in this case, a 200-day moving average and a 50-day moving average? Well, what you'll notice here is that the 50 is the red. That's the shorter term moving average, right? No, I'm sorry, that's wrong. The 50 is going to be this blue, and then the red is the longer, the 200-day and the 50, okay? So what's happening here is that the reason that this is smoother, the red or the longer moving average, is it's got more data in it, right? What happens the more data that you have and the more you average it, the more compressed it gets, right? Moving average, the simple mean. And then the blue line here is the shorter moving average. So the theory is, and this is the truth, this happens, I do this with every stock. This is something I look at on everything. I put this on the daily recap recently, but the main point here is that it's an obvious downtrend when the shorter moving average is on the bottom and the longer moving average is on the top. And what happens is you can get a confirmation of a turn, or a confirmation actually of just a sustained up or downtrend. So in this case, we have a downtrend with all the red. We've got this, you'll notice here that there's kind of this ribbon of divergence in the moving averages, and then it turns. So it turns, but then we start seeing the moving averages starting to converge here, and that's what MACD is. I'm going to do a video about that next. So think about the distance between the short and the long moving averages, and remember that in this case, the short or the most recent data is on the bottom, and the longer or the more data is on the top. And then what happens is the golden cross is when they cross each other, and when they cross each other, what happens? So we've already seen that we've really missed out on a lot of the upswing, right? We missed out on a ton of the positive returns here on this chart, but this is confirmation that it's going to continue, okay? That's the idea there. And then it continues, and what happens here, now we've got where they cross. That means that now the more near-term data versus the long-term data has crossed over, and then we have another, however many months this is, we have from March to June, basically, yeah, straight up till June of positive returns in this individual stock here. And then what happens? We have the divergence, and then they continue to grow. Here we have a little bit of what's called a test. This is a long-term moving average test. It's testing the long-term moving average. If it broke much below that for more than, let's say, 3 days, you sell it, okay? So that's the idea. That's the 50 moving day again. So the short one with the blue, and then the red being the long one. And the idea there is that the more recent data is confirming a trend. And remember, the distance between these is called a divergence or a convergence, depending upon if it's getting more, getting less, and that's MACD, and we're going to get to that in the next one. So a golden cross, what's a golden? Golden is good. I just think of that. They both start with G's. Golden is good. Good is bullish. Gold is bullish when you're stacking it in your closet after you become a great trader here at Ever Bullish. So the golden cross, real simple. I've got it written out here. You're going to have to go to the website. You're going to have to follow along. I have a downloadable PDF that you can save to your computer. You'll have this information forever. You're welcome. Go buy me a cup of coffee, baby. All right. The death cross is literally just the opposite of that, right? So we have the 200-day moving average being the line with the least amount of noise, and then we have the blue line, in this case, as the 50-day moving average, and that's why it's got a little bit more oomph on it, a little more twerk on it, if you will. So what's going on here is that we've got a similar chart. We've got some downtrend happening. We've got our 50-day moving average on top, so the shorter-term moving average on top, the longer-term moving average on bottom. And right here, we have from October to December some bearish returns. And you're going, all right, well, am I going to get out of this stock? Does this stock suck? Is it time to cut and take my losses? Well, let's figure it out, right? The death cross happens right here. That means death cross. Remember, death is bad. Bad is bearish. D is for losing dollars. I don't know. Figure it out. You can get your own. But remember, if you go to everbullish.com, sign up for the free newsletter, buy a portfolio, buy me a cup of coffee, download this to your desktop, put it together for you for free here on a Friday after the bell. And the Sherpa, again, is taking it to the top of the mountain. So a couple things that I want to think here. See where this death cross is? when you see these start to converge here, so they're diverging and then they're converging, you'll notice there's going to be a histogram below that on any, particularly in the Stockmaster app, on Fidelity, on Active Trader Pro, whatever it is. And then right when they stop diverging and they start to converge is when this turns bearish. So the really bearish part of this stock is losing right here. So something that you can do is you can anticipate in a 200-day moving average with a relatively volatile stock is look at where it crosses when they start to, when the red line crosses this cell right here. What I want you to do next time you see that, throw the 200-day moving average onto a stock that you're considering taking gains on, and just set your limit, your sell stop limit at where the 200-day moving average is in. So we're looking back in time here, but in this case, it would be at 2750. Go ahead and set it at 7250. Go ahead and set it at 72 even. What's going to happen there? You're going to trigger your stop. You're going to take your profits. You're not going to have to worry about anything. You're going to go tell your golf buddies, we're playing 100 a hole today because I made some money and the Sherpa taught me how to do it. You're welcome. Thank you as well. This is the fastest growing newsletter that I'm aware of on the entire internet, and it's all because of you. Final thing here is that this still isn't science. Remember, 14 years of trading, the best expert I know, never met anybody better or more intelligent about this. And I still only have about a 60% chance when it comes to trading a stock. I'm doing better since I've started this channel, so I'm not stopping that. But there is some variation of opinion. Sometimes people on shorter term charts use 13 and 29. Some people use 14 and 29. Here's the way I want to use an analogy. If I'm standing at the craps table and I'm throwing rocks, I seem to throw a lot of fours. Now, I know damn well that throwing fours is not necessarily very likely to happen, but there's some type, it just seems like it does. And if it seems like it does, I'm a lot more okay when I throw a little side bet on the fours the hard way, and I maybe buy a field bet because a field is a 4 number. And there's all those things that I can do, and I just feel fine when I lose the money when I do that because I feel like there's something behind it. So you got to figure out, put your own spin on it, figure out some numbers that work from you. Remember those trades. That's what keeps you coming back on the bad days. I could carry on, but I want to stop here. I want to share this with everybody. The Sherpa is here for you. Show some love. Buy one of my portfolios. That's the easiest thing because you're going to make more than that $100 back. And everybody that buys the Ever Bullish All Stock portfolio from now to the end of the year gets it for the $100, and they get next year too. That's a thank you for helping me grow this business to, roughly a full-time venture outside of my personal day trading. It's all because of you. I love you. And if you get the chance, go to everbullish.com. I've got a new way. Instead of charging for this information, I want the people that value it to pay what they think it's worth. And in the worst case, always just pull up everbullish.com. When you make money on a trade, all you guys that made money on ERX, pay it forward. We'll grab a cup of coffee, and we will just go live the high life together. So again, I'm the Sherpa. I am Chase at Everbullish. Everbullish.com is my newsletter investing blog. I give you free information, free trades, free watch lists. And in return, I just ask that if you found it valuable and made some profits, toss me a cup of coffee. You do that for your buddy. Your broker's not up here at 7 o'clock after the bell on a Friday teaching you things that he knows but doesn't care to share with you. Fuck them. Roll with me. Chase Everbullish, everbullish.com. There is an Everbullish One podcast. Please like, review, and subscribe. And finally, AFG, all good. LGR, let's get rich. LFG, let's freaking go. Later, guys. That's fucking awesome.